Welcome to Markets Now. I'm Michelle Rook with Craig Turner of StoneX. We had a down day in corn, soybeans, and cattle futures, kind of mixed in wheat, higher, and hogs. So let's talk about corn and soybeans first of all, but in particular soybeans. Do you think the market was a little disappointed that the trade framework with China that we struck, that we didn't get more details?
Yeah, there's not gonna be a whole lot of it's very difficult to put money to work and to buy, any of the grain and oilseed markets, particularly soybeans, if, if we're not seeing buying from China. Um, I think that, we also have a pretty big South American crop, with 83 million acres and a trend line yield. We don't have a shortage of soybeans, and for the market to really get excited about soybeans, we're gonna have to see some kind of either weather issues, which we're not getting, or improve demand. And it's just very difficult to see the demand side of soybeans, without the details of a deal with China.
And speaking of trade, it's not just the China deal, it's all of these deals. The market is getting kind of impatient, waiting for more details or more sales and more demand, right?
Yeah, absolutely. We talk about soybeans first because of China, but corn, wheat. Take corn for example. It's very difficult to get excited about the corn market prospects with a tariff war going on. Exports. Basically, for the corn market to really go higher, even though we have old crop at below 1.5 billion, which is 1.4 billion now, we're below a 10% stocks usage. If exports were strong or a regular marketing year, we would most likely be rallying, and the market would probably want to be price rationing old crop, but they don't. July D's is about even, and I think with about 6 weeks, 7 weeks away from August, and maybe some of the early corn getting harvested, there's no real threat of running out of corn right now. Also, it's hard to see the funds getting very active in buying old crop if there are trade deals, if there's no trade deal and we're still in a tariff war. That's a position you have to defend, and that's kind of hard to do. So, it affects everything. And to move the grain markets, the cash market certainly matters, but you also need that money flow from the funds. And it's just hard to get bullish, with all these tariff discussions.
Yeah, and you mentioned the tariff war, and in fact, the appeals court has now said that the tariffs can stay in place until what, July 31st?
That's the last I heard too, which pretty much takes out all of old crop demand for us, right? So that if you're a fund or you're a trader, or even if you're a buyer of grain, I don't think you're worried about anyone coming in and driving the market up if the tariffs are going to be into effect until at least the end of July. Because if you need to buy corn, and let's say it's August, well, some of it's already starting to could be, early corn in the deep South could already start becoming available. And then if you don't need it immediately, wait till September, you're gonna have a whole lot more corn coming online as we go through the calendar. So and you've been seeing lately, not only has July been coming down against December, and so is Septis. We've seen days where July was down a penny or two, or December was up. Sometimes December has been the leader, and I think the reason is when you think of stocks and ending stocks, they're not mutually exclusive between crop years. They really are continuous. So we're getting to a point where the money flow and the funds are probably stop. They're not looking at the old crop carryout as much as they're looking at their projections for new crop.
Yeah. How much of the press by the funds is, as you mentioned, though, is just the lack of a significant weather threat?
That's certainly part of it, right? Good to excellent ratings have been going well. We've been planting. There is a little bit of risk maybe coming into this June 30th report with maybe a little bit lower acres because from southern Illinois into Missouri or into southern Indiana and southern Ohio, maybe we are behind a little bit in some of those areas. Maybe there's a little bit of prevent plant. Could have seen a little switching to soybeans, but I don't think it's not enough to really give us a big weather rally. That'd be kind of just a one-time price adjustment. So then to really get a weather rally, you need to have yield issues. And the weather's been okay, and there's no real major weather threat right now in the United States to get that money flow going.
For sure. Tomorrow we have a WASD. You're not expecting a whole lot of changes there. At least the trade is not expecting that, except for maybe old crop corn balance sheet.
Yeah, old crop corn, it has potential to come down a little bit, but when you take a look at The wheat, I mean, with old crop being at 800 million and change and new crop being at 900 million and change, that's plenty of wheat. Soybeans are, I wouldn't call them burdensome, but they're also not very tight. Maybe they're a little snug at around 300 million. But again, with a trade war and a tariff war going with China, it's hard to rally there also. And the USDA tends to make little changes in June. The big report in June is usually the last day of the month, last business day of the month when we get the acreage and the quarterly stocks. And they tend not to really tinker with yields until July. So I'm not expecting not expecting a big surprises out of June. Um, and then really what we'll probably have to see here is what the acreage report is.
Absolutely. And that could have a few fireworks like it always does. The wheat market, we took off or erased pretty much all the last week's gains in the first 2 days of this week. Is this market just kind of gearing up now for harvest? Is that where we're at?
I think so. I mean, it's June. And winter wheat harvest is here. If we're well supplied too. So if you think about when we've had well supplied wheat markets, let's say before COVID, we could kind of bottom out in the mid to high fours. You add on 20% inflation, since COVID, you can make the argument maybe the low to mid fives is where wheat should be trading. It's kind of where we are in the winter wheat side of the market. So that seems kind of fair to me. Maybe it can go down a little bit, but when you've got 800 million carryout and 900 next year, it's a little bit like watching paint dry. I'm not expecting any big moves. I mean, I think if you're a buyer of wheat, you'll see buying come in if we break below 5. If you get, 550, 575 on the balance sheet, at least it looks a little bit overvalued, especially when it's compared to other wheat around the world and what it's trading out on the export market. The one bright spot for wheat is probably spring wheat. We are
Right.
getting tighter, right, in that market. There's 30 million acres that's grown of spring wheat in North America. 10 of them are in the United States. Majority of it is in North Dakota. That other 20 million or so is in Canada, in the Western Prairies, in Manitoba, Saskatchewan, and Alberta. And it is dry up there. And the latest weather run I looked at, they were expecting some rain, and some of it came out of the forecast.
Something to watch for sure.
Yeah.
Let's talk about the cattle market, mostly lower prices there. Was that market seeing some routine profit taking until we get cash trade development? Or is the market concerned about these ice raids that we've been seeing at packing plants?
Yeah, so I think it's we did see that news broke. We saw the market actually come down. I think anyone the market's so long and there's so much positive P&L made in a lot of positions. Any kind of news that would uh, cause you to take profits, I think you start to see that. So if you get any negative news in the market, it's going to sell and sell hard. I think that's what we saw this morning. But by the end of the day, even though we ended lower, we were well off the lows. When you take a look at the cash prices in the index, we're still much higher than the futures market. And at the end of the day, just looking at the cash price and the index and where the futures are, you would think that we would go higher. Now, the party can stop at any time. It's hard to see how we expand, the animals here. Just for the conditions of the current operations and guys not wanting to take on all this risk. But I don't know what's going to bring it down. We're even seeing the lean hog market now starting to giddy up and go, following cattle because the demand doesn't really seem to be being hurt so much for cattle and beef. But it's certainly now getting into the hog market. And I think what we're seeing here is the hog market starting to catch up to cattle because of the high prices.
Yeah, we're up into contract highs though in the hogs. How much higher do you think we can push this thing?
Yeah, it's interesting. And we're in the summer months. This is usually where the demand is highest. And the thing is, normally we'd be looking seasonally, be looking for a top over the next month in the hog market. But if I mean if cattle keep on going like this, it's hard to see lean hogs break when cattle keeps on going up like this. So, and honestly, at this point, seems more like hogs are a follower.
Okay, good point. Thanks so much, Craig Turner with StoneX. That is Markets Now.